Hello, everybody, and welcome back to the world of investing. It's been a little while since I last released an episode, and I just want to say I'm sorry for the unexpected break. I'm now back in podcast mode, and I'll be starting again to release episodes. And I'm not sure how frequently I will, but it will obviously be at a much more fast pace than recently, especially with my break. So, I begin my return with this episode, and that's titled The History of the U.S. Stock Market. In this episode, I'm going to take a step back from teaching specifically how to invest and strategy to investing. Instead, I'm going to discuss what I believe to be an interesting topic, and that is the history of the U.S. stock market. So basically the process of the ups and downs that ultimately made the stock market what it is today and how it was actually formed over time. So, for example, with the blossoming of certain indexes and exchanges. Alright, so the U.S. stock market clearly goes way back, specifically to the 1700s, and I will touch on that, but first, I more so want to focus on the 1900s to present day. Or not first, but that's what I want to highlight more in this episode, the 1900s to present day, because I feel like this timeline contains, more significant dates, and it highlights major advances in the stock market and the process of the drastic ups and downs that I previously mentioned. Alright, I will now briefly get into the 1700s. So, in the late 1700s is when the creation of the U.S. stock market occurred. So in the year of 1792, a small group of stockbrokers and merchants signed this agreement called the Buttonwood Tree Agreement, which officially established the parameters for trading. The men involved in this agreement, they met daily to buy and sell stocks and bonds, and this practice would eventually evolve and grow into the New York Stock Exchange, and practice of selling stocks and bonds is what occurs today. So you see that clear evolution over time. Let's get back on track with the New York Stock Exchange. This is not the U.S.'s first stock exchange. The U.S.'s first stock exchange is the Philadelphia Stock Exchange, and that was formed in 1790. And it was beneficial to the economic development of the U.S. and would later play a role in westward expansion. Jumping to 1896, which is a pretty large jump. Specifically during this time, I feel that it is not necessarily discussed due to the lack of major stock market events. It is important to know, however, that the stock market was beginning to develop at this time, specifically with the emergence of the Dow Jones Industrial Average in 1896. So I briefly explained what the Dow Jones Industrial Average is in a past episode, but just in case it doesn't come to mind, the Dow Jones Industrial Average basically tracks the performance of the stock market, but it's only based on the performance of select companies, so it doesn't represent the economy as a whole. And when the Dow Jones was first created, it initially was composed of 12 companies, and they were mainly industrial. And once again, that was in the year 1896. In later years, the Dow Jones would obviously blossom significantly and eventually become one of the major indexes as seen today. So fast forwarding nearly 30 more years, in 1923, this is when the S&P 500 rose. And the S&P 500 is another index that I previously touched on in a past episode. I'm pretty sure it was the same episode. So once again, I just want to refresh everyone if you forget what exactly it is. So the S&P 500 is based around currently 500 large companies. So it obviously more represents large company U.S. stocks. But around the 1920s, however, specifically in 1926, it tracked 90 stocks. And years later, eventually, S&P 500, also known as Standard & Poor's, would officially be founded in 1941. Quickly, I want to mention another index, NASDAQ, and that is a technology index, or it's composed of technological companies, and it's not nearly diversified as under indexes, obviously due to this technological aspect, but it does include companies of different size. So I guess that if you're going to compare that to the Dow Jones, I guess it's more representative of different size companies, whereas the Dow Jones represents larger companies solely. To get back on track, the NASDAQ stock exchange began trading in 1971, or trading began on the NASDAQ stock exchange during that year, to specify. Alright, up until now I've been discussing, I guess, the formation of the stock market, and more specifically the blossoming of well-known indexes. To give a quick recap, the Dow Jones Industrial Average, Standard & Poor's 500, and NASDAQ. I now want to, I guess, travel back to the 1920s, where I will highlight the major economic booms and declines, and after I touch on those, that will bring us to the end of the episode. So let's get into that. To start, the Roaring Twenties. This was a period of social, political, and economic change, and I want to highlight economic because this is what this podcast is about, the economy of the U.S. and the stock market. So that took place during the 1920s in the U.S. During this time, the nation's total wealth doubled. So between 1920 and 1929 that occurred. So ultimately, an era of mass consumerism was created from this, like, gain of significant wealth, where people bought and sold products on a mass scale and increasing scale. With this economic success, however, came the Wall Street crash of 1929. So this event was when the stock market crashed. The Wall Street stock market crashed as a result of mass bets made on the stock market by investors, and this caused inflation, significant inflation, and that basically led to the large crash. As a result, billions of dollars were lost, and America entered what I believe everyone's heard of, the Great Depression, which was, if you haven't heard of it, the worst global economic downturn in history. And on a global level, it was the worst economic downturn in the U.S. Obviously was very negatively impacted. From 1929 to 1932, the U.S. stock market fell approximately 89%. And that's the largest U.S. stock market decline in history. Eventually, after more than a decade, the U.S. economy would stabilize, and it stabilized as a result from widespread industrialization and also an increased employment rate due to the start of World War II, as on the home front, and employment into the army, and also the creation of weapons and ammunition in order to fight in World War II. So to get back on track, throughout the rest of the 1900s, the stock market would continue to experience great downs and restabilization, leading to success. With the success, obviously, came more declines. So I guess during the 1900s, it was a period of both declines and inclines in the stock market, and to be more specific, drastic increases and decreases. Another significant date in the 1900s, aside from the stock market crash of 1929, the Roaring Twenties and the Great Depression, was called Black Monday, and that was on October 19th, 1987. And this was when stock exchanges truly plunged. For example, the Dow Jones Industrial Average dropped around 20% in a single day, and that was the largest one-day stock market decline in history. Fast forwarding to the 2000s, with the growth of these indexes and an evolved U.S. economy and market, once again came another crash. In the year 2008, this occurred after a boom in the housing and mortgage market came a bust in the stock market. This marks the most serious U.S. financial crisis since the Great Depression. The U.S. stock market fell 55%. I wanted to highlight this date to show that, like, still in an advanced and modern society, the stock market can drastically take a turn for the worse. So I guess that shows a risk to investing. And how the stock market fluctuates over time with great increases and great decreases. But also at the same time, like, there's a clear cause of this crash. It wasn't necessarily unexpected, and it was due to the large boom in the housing market and mortgage market. Eventually, after economic recovery, and in later years, most recently with the global pandemic, major indexes plummeted once again, which I just wanted to touch on because I kind of find it fascinating that we lived during this, like, significant downturn, and I guess poses a question. It's like, how will the economy continue to recover, and what is the future of the U.S. stock market? With that being said, and with that question now being, I guess, put in your brains, I hope that you found this episode interesting and that you seek to gain more knowledge about the history of the stock market and, of course, the future with the question I just posed. I hope it leaves you thinking and wondering and possibly doing more research on your own to solve it or figure it out, or lead yourself to more questions, which is, once again, my goal: to teach investing, learn myself, and also, I guess, share my interests and hope you become interested in the topic. Alright, so thank you for listening to this podcast episode.